On 30th of October, after market hours, the Apple and Amazon released the earnings, and now the earnings season is virtually over. And we must understand that the stock market was getting the help and was trading bullish because of these two reasons. Number one, in the absence of the data. Number two, because of the earnings season. But now that the earnings season is over, this means the bullishness in the market will now be limited. Rather, because of the heaviness, the S&P 500, Nasdaq, Dow Jones, the indices and the entire US stock market is now expected to come under the technical fall. And why this technical fall will happen? So for that, you need to understand that on Thursday, 23rd of October, the S&P 500 was struggling. It was trading within the low and high of this candle formed on 10th of October. However, on 24th of October, the S&P 500 moved up heavily and the open was above the previous all-time high. And the S&P 500 came into the open equal to low condition and sustained and closed in this condition. And because of that, we have seen more bullishness. However, on the same day, on 24th of October, the S&P 500 came into the condition wherein it was very near to hit the saturation, and then on Monday 27th of October, the S&P 500 hit the saturation and the overbought conditions. This is why after hitting the saturation and overbought conditions on Monday 27th of October, the S&P 500 gave a limited movement in the bull side and came down. But the most important aspect of this, the movement in the bull side and the fall, was that on 28th of October, Tuesday, and 29th of October, Wednesday, on both of these 2 days, the S&P 500 closed below the 6,900, and this was the rejection. That is why in my pre-market analysis on the next day, on Thursday, I mentioned that there was the second consecutive rejection from the 6,900. This means that now the bullish side, that it has come into the very heavy bearish condition. And when it trade bearish, then where it will be heading to? In that case, it was clear that the S&P 500 will be heading to the 6, 8, 3x/4x zone. And one of my Patreon community members have asked me this question, that why I am saying that the price has to come down to this the zone. Then I mentioned again and again that this is how it works, because these are my calculated zones. No matter what, the market will correct itself. The S&P 500, Dow Jones, Nasdaq will correct itself, and it will have to come down to fulfill its technical obligation. Now, there was more surprising movement on Friday. Yesterday on Friday, on 31st of October, the S&P 500 came into the open equal to high condition. But why it was supposed to trade bearish? It was because the closing on Thursday, on 30th of October, was below the zone, this zone. And the same was mentioned in the final update to my Patreon community members, that a closing below is a heavy bearish condition indicating a gap down open, or irrespective of any open and initial or intraday bearish movement. That is why even after getting a good support from Apple, Nvidia and Amazon initially, there was a very heavy gap up open, but still the S&P 500 lost heavily and came into the open equal to high condition. And because of this, now we are expecting a gap down open on Monday, or irrespective of any open and initial or intraday bearish movement on Monday. And guys, remember that the S&P 500 is going to come down. There will be a fall. All of this started to happen from Tuesday, from 28th of October. And why was that? Because the S&P 500 was giving back-to-back technical bearish candles, and it was in a condition wherein technically it was not in a condition to sustain at all. There was no more bullish movement left, but yes, the bearish side was still there. Bearish side was wide open. So what will trigger the bullish movement? What will trigger the bearish movement? What will be the tiebreaker? All of these bullish bearish conditions, numbers, etc., I am going to discuss in detail in this S&P 500 weekly technical analysis, which is for the week of November 3rd. Means from November 3rd, which is Monday, to November 7th, that will be Friday. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you want to get these daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, let me tell you that I have divided this S&P 500 weekly technical analysis in two parts. First is the technical part, second is the probable movement. In the technical part, I will discuss the technicals on the weekly and the daily chart in order to understand the trend, the long-term trend, the short-term trend, the saturation, the overbought, change in the technicals, all of these here. The second part is the probable movement. In the probable movement part, I will tell you what is expected to happen in the S&P 500 in the next week, in the week of November 3rd. What will trigger the bullish condition, what will trigger the bearish condition, and to what level it can move up in the bull side, and if it comes down, then what will be the heavy support for the S&P 500. All of that, the probable movement in the second part. So now I am going to begin with the first part, the technical part. So guys, this is the weekly chart. So first I will discuss the weekly chart, then I will discuss the daily chart. In this manner, I will deduce the technical trend, bullish or bearish, and the technical indicators and the candles, everything. So first, this is the weekly chart. Weekly chart means one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week. So let's first analyze the candle. The candle is, if you understand, the open and the closing of the candles of this, the last weekly candle, are below the 50% of the candle itself. Okay, so it's a bearish candle. It's a technical bearish candle. Okay, even though it might look bullish, but it's a technical bearish candle because it is below open and closing, both are below the 50% mark. Okay, this is indicating a gap down open on Monday, or irrespective of any open and initial or intraday bearish movement on Monday. Now, other than that, this candle is also a kind of candle that generally indicates the reversal in the market. Okay. Now, if you notice, in this case, this is the moving average, the red moving average, and it's been many months. Okay. After April or May, since the S&P 500 on the weekly chart has not tested this, the red moving average. Okay, so now by default there is a diversion, heavy diversion through the moving average on the weekly chart. This means that once the technical reversal starts, okay, the short-term reversal starts, then this reversal will be at least up to the moving average or in the 6,600 range. Now this is fine, this is perfectly okay, because 6,600 is something that was earlier anticipated, okay, based on the movement, because the S&P 500 was getting heavier. Okay, now let's analyze the last weekly candle of the Dow Jones. Well, the last weekly candle of the Dow Jones is exactly the same. The open and the closing are below the 50%, but in this case the closing is above the open price. And both of these, the open and close, are above the high of this candle. So this is a candle that indicates an initial or intraday bearish movement on Monday, but does not confirm a gap down open on Monday. Okay, why? Because of this, the closing is above the open price, though it is below the 50% mark of the candle itself. Okay, the pressure is there, but still it is in a condition which is indicating some bullishness. That is why an initial or intraday bearish movement on Monday, okay, but it's not confirming a gap down open or gap up open. And also this candle is not confirming a reversal. The S&P 500 is indicating a reversal, but the weekly candle of the Dow Jones is not confirming a reversal. Okay, so now it is clear that on Monday, irrespective of any open, there will be an initial or intraday bearish movement. There may or may not happen a gap down, okay, but based on the conditions in the S&P 500 and in the Nasdaq, okay, though I am not analyzing the Nasdaq chart, but these conditions are seen in both of these charts. This means that initial or intraday bearish movement on Monday, okay, and there is a good possibility of a gap down open. Now, in terms of the technicals, this was through the candle, but in terms of the technicals, S&P 500 on the weekly chart, remember guys, weekly chart means a trend, the long-term trend, that is the weekly chart. So in terms of the technicals, S&P 500 is still holding bullish through the Bollinger Bands, moving averages, and the Chimoku cloud on the weekly chart. And the only change that was there last week was the bearish stochastic RSI, but it is now also bullish. So S&P 500 is bullish through the stochastic RSI and also through the MACD. So S&P 500 is now or has regained its absolute bullishness. Means the S&P 500 is 100% absolute bullish on the weekly chart. What does this mean? Okay, one more thing. S&P 500 hit the saturation. Okay, now it's trading at the junction of the saturation at the borderline because of this intra-week retracement. But again, any more bullish movement, even a slightest bullish movement, will trigger that saturation and the overbought conditions on the weekly chart. Okay, so bullish side for now is expected to remain limited, and the entire market is expected to struggle in the bull side. Even if it moves up heavily just like last week Monday and Tuesday, then again Wednesday, Thursday, Friday it will come down. Okay, means more bullish side is not sustainable in this condition. Okay, so it is 100% absolute bullish S&P 500 on the weekly chart, indicating that trend is absolute bullish trend. This is the long-term trend. That is why intermittently we have seen very heavy fall. Okay, some good gap down open, very heavy fall, but still the market was moving up. Why? Because that trend is still bullish. There is no change in that trend. Okay, earlier there was some change, but now because of this candle, the stochastic RSI has also turned bullish. So this means absolute bullishness. Dow Jones is also bullish through the Bollinger Bands, Ichimoku cloud, and the moving averages on the weekly chart. And the Dow Jones is, yes, exactly the same. Dow Jones is also bullish through the MACD and the stochastic RSI on the weekly chart. Exactly the same condition in the Dow Jones. But the Dow Jones problem with the Dow Jones is that the Dow Jones is overbought. It is trading at the overbought. Okay, overbought levels or the overbought condition Dow Jones. Okay, saturation, it will, any more bullish movement, even a slightest bullish movement will trigger the saturation. Okay, and the overstretched and all of these, the overweight, all of these are condition. So this means that the Dow Jones is also technically 100% bullish, 100% absolute bullish on the weekly chart. This means that the US stock market is technically in the absolute bullish trend. Technically, it is in the absolute bullish trend. But this bullish trend does not mean that the market is allowed to continue to move up. Why? It is like exactly the same kind of pattern. Let me show you the pattern. This was the week of 28th of July. Okay, heavy bearish candle, right? Then what we have seen? 1, 2, 3. 3 bullish candles. Because of that, it hit the saturation. The next week, okay, in the next week we have seen a red candle. For the entire week it traded red, but it was limited red candle. Means limited fall was there, not heavy fall, but limited fall was there. In this case, the limited fall was like 1%. And now you can notice the same pattern. There is a very heavy red candle, and then 1, 2, 3. Okay, again hit the saturation and the overbought condition. Okay, but in this case it is slightly different, because if we analyze the conditions in the S&P 500, condition in this case of the S&P 500 were more bullish supportive. Conditions in this case of the S&P 500 are not that much bullish supportive, rather are indicating pressure. Okay, so now based on through the patterns, through the movement, through the technicals, okay, most likely the next week we can see a red weekly candle. Bullish side struggle, bearish side is open, but limited open. Okay, there will be a few conditions that will trigger a very heavy fall that I will discuss in the next part, the probable movement. Okay, now let's see what the technical indicators are saying on the daily chart. See, weekly chart is the long-term picture. Okay, but if you are trading intraday, okay, or every day of the week, in that case weekly chart may not work for you, though eventually the market will correct itself to the bullish. But then comes the daily chart, because daily chart will tell you what is happening on the daily basis, okay, intraday basis. So this is the daily chart. Now, before I discuss the daily chart, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And guys, so far, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. And if you want to get these daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. So now this is the daily chart of the S&P 500. On the daily chart, S&P 500 is bullish through the moving averages, through the Ichimoku cloud, through the Bollinger Bands on the daily chart. However, there is some change. This change in the stochastic RSI. MACD is still bullish, okay, of the S&P 500. But the stochastic RSI is bearish. This means that the bullish support that which the S&P 500 was getting earlier, okay, that heavy bullish support or the absolute bullishness is not there. That is why the S&P 500 on the daily chart is 80% bullish. Okay, now remember one thing. If there comes one or two red candles, okay, in that case, what will happen? In that case, the MACD of the S&P 500 may turn bearish. And once the MACD of the S&P 500 turns bearish, then it will support the bearish stochastic RSI. Then both of these, the bearish stochastic RSI and the bearish MACD, will put pressure, and that will trigger very heavy fall, continuous fall or very heavy fall. Okay. So as long as the MACD of the S&P 500 is trading bullish, okay, there is no problem. But it will trigger heavy fall when MACD and stochastic RSI both start to trade bearish. So S&P 500 80% bullish is still supporting the heavy bullishness on the weekly chart. This means that the fall that we are anticipating is expected to be limited and recoverable. Okay. Dow Jones. This is the daily chart of the Dow Jones. Here, in case of the Dow Jones, well, technically the Dow Jones is bullish through the moving averages, Ichimoku cloud, and the Bollinger Bands on the daily chart, and the Dow Jones is bullish through the MACD and is bearish through the stochastic RSI. Exactly the same condition. Okay, so Dow Jones is also 80% bullish on the daily chart. Okay, but again, if the MACD goes bearish, then we will expect heavy fall. Okay, this kind of fall, heavy fall will be there. Okay, so what does this mean? 80% bullish or 80% bearish, okay, and then 100% absolute bullish. So what does this mean? This means that as of now, S&P 500 is holding, okay, holding at the 683x/4x zone. And the S&P 500 has lost the zone on the hourly basis, but only on 1 hourly basis. Okay, though it is more than sufficient. Just 1 hourly closing below the zone is more than sufficient, but the S&P 500 is showing reluctance to come down. But now we will wait for 2 consecutive hourly closings below the zone, the 683x/4x zone. Once there comes 2 consecutive hourly closings, okay, then it will override all bullish conditions, and then this will trigger fall. Okay, because I'm talking about the hourly closings, then this will trigger fall, intraday fall. Okay, now if there comes a daily closing, just like these are daily candles, if there comes a daily closing below the 683x/4x zone, okay, in that case, that will be a perfect scenario for a fall. For a fall to what? For a fall to the 6,700 range, to the 672x. Before that, the 672x, there is the open price of this candle, that is 6772.07. And once the S&P 500 starts to trade below 683x/4x, okay, then the same will act as a strong resistance, a strong barrier, a strong resistance zone when the S&P 500 will take a U-turn. Okay, after fulfilling its obligation to the bearish side, when it will take a U-turn, then the same zone will start to act as a strong barrier, strong resistance. And if during that reversal, if the S&P 500 fails to recover, in that case we will see very heavy fall, and that will be the short term reversal. It will enter into the short term reversal cycle. But guys, whatever is going to happen or whatever will happen, I will keep you posted. I will keep you updated through these daily precise updates which I give to my Patreon community members every day from Monday through Friday, like the pre-market analysis before the open of the stock market, first update, second update, midday update, final update before the closing. And that's not all, because I also gave the premium opportunities to my Patreon community members, 50 to 80 premium opportunities. And here the win rate or the success rate is more than 80 to 85% through these the premium opportunities in the stocks and the ETFs, because everything is clearly mentioned. And that's not all, because I also gave the mid-week update. It is the video technical analysis which I give to my Patreon community members every Wednesday or Thursday. And here I discuss all of the conditions and with the specific numbers and the zone. So guys, if you also want to get these daily precise updates every day from Monday through Friday, and also the stock market opportunities, and also the mid-week update video technical analysis, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. And guys, when you follow that link, then you will see that this is my Patreon page and this is my Patreon profile. And here you will find this button or this tab that says membership options. And when you click on this button or the tab that says membership options, then you will see that there are these 3 tiers or 3 levels. When you subscribe to this tier or level that says daily S&P 500 updates, then you will be getting daily precise updates and also the all midweek update videos. And when you subscribe to this, the level 2 that says S&P 500 updates and premium opportunities, then whatever you are going to get here, by default you will get here the S&P 500 precise updates, levels, movement, momentum, levels, zones, and the all midweek update videos, and the premium opportunities in the stocks and ETFs every month, 50 to 80, 50 to 80, where the success rate is more than 80 or 85%. When you subscribe to this, the level 3, then whatever you are going to get here, by default you will get here. Other than that, there will be one Zoom video meeting, one-on-one Zoom video meeting. And through this Zoom video meeting, I will tell you all of these, the entry exit secrets, the premium hacks, the trading strategies, the modified technical indicators, the options premium calculator, each and everything in detail. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, years, and they are getting these daily precise updates every day from Monday through Friday, as well as the stock market opportunities in the premium stocks and ETFs and the midweek update. And in this manner, they are very well aware of what is happening and what is going to happen next. So guys, whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section. Now guys, I'm going to discuss the second part of the agenda, and here I will give you the probable movement. The probable movement means what is going to happen in the S&P 500, Dow Jones, Nasdaq, and in a manner to the entire US stock market in the next week. The week of November 3rd means from November 3rd, which is Monday, to November 7th, that will be Friday. So whatever is going to happen, I'm going to discuss here. Now, first thing first, well, now the earnings season is virtually over. This means that the stock market is not going to get any help, okay, from the stocks, okay, in terms of the earnings or so. Amazon has moved up by more than 10-11%, okay, but it is expected to cool down. And if the Amazon cools down and Microsoft, okay, other stocks comes down, then by default the index will come down. Okay, so earnings season is over. Now comes the data. Well, because of the government shutdown, the economic data is not expected to be released. However, if this government shutdown ends, then all of the previous data and then the upcoming data, especially on Friday, the non-farm payroll data. Okay, this non-farm payroll data was not released even the previous month. Okay, so now then it will be released, and based on that the market will react. But in the absence of data and the earnings season, the market is now the US stock market and all of the indices like S&P 500, Dow Jones, Nasdaq, will now trade through the technicals, because there is no more speculation and nothing else that can help or fuel the market to continue to move up. Okay, so now here comes the numbers and the movement. But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. Now, in terms of the numbers, what we know is that the zone, the support zone that is helping the S&P 500 to hold is the 683x/4x. This support zone is helping the S&P 500 to hold. On Thursday and Friday, S&P 500 has tested. Okay, on Thursday it failed and closed below the zone. On Friday it has sustained at the zone. But at the same time, the S&P 500 has fulfilled its obligation to the zone. Now, what was supposed to happen when the S&P 500 hit the zone? Okay, so in the previous S&P 500 weekly technical analysis, it was that when the S&P 500 moves up, it will hit the zone. Okay, it will struggle at the zone, and then it should come down. Come down to what? Come down to the open price of this candle formed on 24th of October, Friday. The open price was 6772.07. However, the S&P 500 opened above the zone and sustained and closed above the zone. So there was no struggle at the zone. This means that the testing and retesting of the zone means S&P 500 has partially fulfilled the obligation to the zone. Okay, now this zone was supposed to trigger a fall. Okay, this means that this is the time when the zone should come into the picture and the zone should trigger the fall. Now because of this, the complication caused on Monday, that the open and the closing, especially the sustained movement and closing, was above the zone. This means that in order to see fall, good fall or heavy fall, the S&P 500 must close below the zone. On the daily basis, it must close below the zone, at least one closing. Okay, intraday, 2 consecutive hourly closings back to back, because we have seen that 1 hour, okay, it has closed below and then it has sustained. Okay, so now we'll wait for 2 consecutive hourly closings below, and if there comes back to back hourly closings below the zone, this means that on the daily basis the S&P 500 will close below the zone. Once it closes below the zone, okay, the 683x/4x zone, okay, in that case, this means that the S&P 500 is now ready for more fall to the 6,700 and then to probably to 6,600. Okay, now why I am saying that probably to 6,600? The reason is that if the S&P 500 would have struggled at the zone, okay, means there would have been a little breach and then it would have come down. In that case, 6,600 was there. But now that it has moved up heavily and tested the 6,900, okay, so the fall will be sequential. Not like a straight or this heavy fall, but will be sequential. Means it will come down, hold, reverse, come down, hold, reverse. This kind of fall will be there. Okay, so 6,700 is clearly in the picture. Okay, but the 6,600 might take some time. This means that the zone is going to define the bullishness and the bearishness. Now that we are expecting a gap down open on Monday, or irrespective of any open and initial or intraday bearish movement on Monday, so this means that if somehow, okay, because on the daily chart, on the weekly chart, the candles are the Dow Jones candles are more supportive of the bullishness. If somehow, if for any geopolitical reason, for some reason, if there comes a gap up open on Monday for some reason, okay, gap up open on Monday, then also it will come down. Why? Because of the technical condition, it will come down, just like that it will come down on Friday. We knew this through the final update on Thursday. This final update, okay, that was there on Thursday, closing below. Okay, there's the lower level of the zone means heavy bearish condition, a gap down or irrespective of any open and initial or intraday bearish movement. So it will come down, fine. Now when it comes down, it will test the zone. What zone? The 683x 4x zone. It will test the zone. Now if there comes no hourly closings below the zone during the testing, in that case the S&P 500 will not give up, rather it will remain in a condition to reverse, to get a bullish reversal. But because of the bearish pressure, okay, through the weekly and the daily chart, the bullish reversal will be limited, right? The bullish reversal will be limited at least on Monday. So when I say that it will be limited on Monday, this means that limited maximum to the 687x level. Okay, 687x level is the heavy level, and on these last 3 days, Wednesday, Thursday and Friday, repeatedly in my pre-market analysis, I have mentioned to my Patreon community members, a sustained movement above 687x, okay, means bull side. Below 687x means the zone will be there. The fall will be to the zone. So at least on Monday, not just Monday, but Monday and Tuesday, okay, the bullish side will be limited and restricted to the 687x, provided that the S&P 500 sustains on Monday. Because if the S&P 500 fail to sustain on Monday, in that case there is no bullishness, only bearishness. Okay, so now it doesn't matter that whether it happens on Monday, Tuesday, Wednesday, Thursday or Friday. Whenever there comes a daily closing below the zone, below the 683x 4x zone, okay, that will trigger the fall. Now, as of now, the S&P 500 is showing reluctance to move to the 6,800 psychological mark, right? This means that once the S&P 500 comes down near to the 6,800, okay, then what will happen? Then the S&P 500 will show some reluctance to lose the 6,800 psychological mark, because losing the 6,800 psychological mark, even on the hourly basis, just 1 hourly basis, okay, that is more than sufficient to trigger the fall. However, once the S&P 500, it is confirmed that the S&P 500 has lost the 683x 4x, even either through the hourly basis, okay, or the 4 hourly basis or the daily basis, in that case 6,800 won't be able to hold for long. Then eventually there will be a fall, okay, then it will enter into the 6,700 range. Now it becomes interesting, more interesting in the 6,700. Why? Okay, so it is quite similar to what I mentioned in the previous S&P 500 weekly technical analysis. Open price of the candle formed on Friday 24th of October was 6772.07, right? So when it comes down, then it will get support through my levels, through my numbers, levels, and the technicals, the moving averages, etc. on the daily chart as well as on the lower level chart. It will find technical support. Once the 6772.07 is lost, it is gone, okay, means breach. There comes a breach. This breach will bring the S&P 500 in a condition wherein there will be more fall in the S&P 500. This more fall in the S&P 500 will be to the 674x. This is the initial support level if there comes a breach of 6772.07, though there is a very small zone at this the level, okay. So this 6772.07 is the open price of the candle, and in the 677x is my calculated level. So my level, and this creates a zone, okay, a small support zone, okay. So if the S&P 500 sustains at this zone, perfectly fine, not a problem, okay. Even if there comes a little breach, then also it will sustain, okay. The fall will not be there to the 674x. It must lose, okay, this is the support zone. Once the zone is lost, then the 674x without any doubt, without any problem, okay, it will be there. Now again, most of the retail traders, okay, they emphasize, okay, on this the concept of gap fill. Okay, where is the gap? Okay, the gap is here, right? So now they emphasize on the gap fill. But coming down from the 6772.07 or my calculated my this heavy support zone, okay, it will enter into the 674x. Fine. The closing price of the candle on 23rd of October was 6738.04. This was the closing price on 23rd of October. Okay. So coming down to 674x means that S&P 500 may not fill the gap. Okay. Or it can just touch the high. Okay. The high itself is in the 674x. Okay. But in order to fill the gap, the closing price is considered, right? So when it comes down to the 674x, if it sustains at the 674x, the bearish side is over. No more fall. Okay, initially no more fall, rather it will then try to move up. Fine. But if it loses the 674x and the people will be thinking that okay, now it is coming down to the closing price of this candle on that formed on 23rd of October. But no, it is not coming down to the closing price of this candle. It is coming down to my level, that is 672x. Okay, and when it comes down to this level 672x, then the rules of the level will be applicable, because historically this level has defined the bullish and bearish movement, similar to what I'm talking about the bullish and bearish movement through the 683x 4x zone, exactly similar to that. Okay, because sustained movement closings above the 672x means perfectly fine. There will be a bullish reversal from here to the 6800 and then maybe probably to 6900 if the conditions permit by that time, otherwise to the 6800. If the closing is seen below 672x, then there will be no more bullish reversal. It will be coming down to the 6600 range. So this means the zone that I've repeatedly mentioned every day to my Patreon community members, every day. This zone is what is going to define the bullish and the bearish side movement. Now, the bearish side movement is clear. Now, let's talk about the bullish side movement. Okay, again based on the zone. So, for this, the bullish side movement, okay, the very first condition or the only condition is that there must come a sustained movement and the closing. Closing matters a lot in the stock market. Okay, doesn't matter which stock market you are trading into. Okay, stock market closing matters a lot. What we need is the closing at or above the 683x 4x zone. However, in the current scenario, okay, initially we are expecting the bearish movement. Okay, so I'm not sure that what is going to help the market to hold. Okay, but let's say for some reason the S&P 500 sustains. Okay, it gives up, but intraday retraces, recovers. Okay, sustains. For some reason the S&P 500 sustains. Okay, closes at or above the zone. Okay, if it closes above the zone, perfectly fine. At the zone means picture will remain dicey, some confusion. Above the zone, what will happen then? 687x. Now the problem is that on Monday, okay, the condition says through the technicals on the technical chart, okay, what I've discussed is that any more bullish movement, even a slightest bullish movement, will trigger the saturation and the overbought condition and the heavy divergence. This means that if it try to move up, if it try to remain green, okay, if it try to remain green on Monday, especially on Monday, okay, this will then trigger what? This will then trigger the saturation and the overbought condition. One more thing, on the weekly chart, okay, doesn't matter. So on the weekly chart, whenever Monday, Tuesday, Wednesday, Thursday, Friday, whenever the S&P 500 try to move up or beyond 6840.20, okay, it will trigger the saturation any day. Okay, so let's say for first 2 or 3 days it was coming down, it was trading bearish, okay, and now it has started to trade bullish. In last 1 or 2 days it has breached the 6840.20 mark. Okay, so what will it do? It will simply trigger this the saturation and the overbought condition. This will then again bring it down. This means that there is no scope or no good scope for the bullishness. Okay, so initially or intraday or intra week, even if it try to move up, okay, then it will trigger the saturation. Because of that saturation, S&P 500 will remain under pressure to come down. So as of now, continuous bullish movement is not sustainable. It is not sustainable in a manner that even if you see like this kind of heavy bullishness, then again you will see this kind of very heavy fall within a day or two. That will counter the heavy bullishness. Why? The saturation and the overbought conditions. And this is exactly what you can see here, that when the Feds announce a price cut, okay, a rate cut, then the market has already priced in. It did not move up, rather it came down. Okay, why? Because the market, the S&P 500, Dow Jones, Nasdaq, the entire US stock market was already very heavy and saturated and unstable. It was already in that saturation, okay, and that the unstable condition. Okay, that is why even if the Fed chairman would have said something supportive, okay, the market, there was no more scope to move up. Okay, it was supposed to come down because of this heaviness, saturation and the overbought condition. It was supposed to come down. And come down to what? Come down to the zone. Again the zone. Okay, so exactly in the same manner, in the current scenario also, even if the S&P 500 try to move up, continuously it gives bullish movement, back-to-back bullish movement. Okay, then what will happen? Eventually there will be a fall, heavy fall. It will be coming down to the zone 6, 8, 3x, 4x. This the zone. So what will be the condition? A sustainable bullish condition. So a sustainable bullish condition will be that first the S&P 500 should lose the zone. It should trade red for 1 or 2 days, at least for 2 days, not one, but for 2 days it should trade red, because when it trades red, okay, then it will create some room in the bull side. Okay, then after 2 days or 3 days, it then start to trade bullish. Okay, why it can trade bullish, or why there will be a reversal, or why there can be a reversal? Because it is 100% absolute bullish on the weekly chart. The trend, the big trend is bullish, and even on the daily chart it is still bullish. Okay, 80% bullish. So this means that any fall is recoverable, right? So first it should give at least for 1 to 2 days or 3 days of fall, creates a room in the bull side, and then in last 2 days, okay, last 2 days it should move up. And if it moves up heavily in last 2 days like this heavily, then also that will be allowed. Okay, then what will happen? When it breaches the 684020 mark, okay, it will hit the saturation on the weekly chart and the overbought, okay, that thing. But because of the daily chart, there will be more than enough room to accommodate the bullish movement. This means that even though there will be some saturation, okay, on the bulls through the weekly chart, but still the daily chart will be able to accommodate that kind of saturation, a little saturation. Okay, so this means that the bullish movement, irrespective of anything, okay, whether it moves up initially, okay, or comes down and then moves up, the bullish movement will remain limited and restricted. And if it doesn't come down, okay, in that case it will hit the saturation, overbought, heavy divergence on the daily as well as on the weekly chart, and that will trigger heavy fall, okay, this kind of fall. Okay, and then that will simply initiate the short-term bearish reversal, the short-term bearish trend. And that short-term bearish trend will not be recoverable for at least for 1 to 2 weeks. So guys, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. And if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you have not yet joined my Patreon community, then I have given the link in the description of the video and also in the comment section. You can use that link to join my Patreon community. And guys, if you have any questions that you want to ask, then please feel free to ask your questions through the comment section.